Hello and welcome to the Week in Review, the show that brings you up to date with the week that was. Here are the top stories. March industrial output growth accelerates to 2.5%. Banks ready to move debt recovery tribunal against Kingfisher. And car makers see the worst sales streak in history. India's factory output picked up pace to rise 2.5% in March from 0.45% in February. This may be a sign that the economy is finally stabilising. During the month, manufacturing grew at 3.5%. For FY13, growth in the index of industrial production slowed to 1% from 2.9% in the previous year. In terms of industries, 10 of the 22 industry groups in the manufacturing sector showed positive growth in March. Last week, RBI had cut the repo rate by 25 basis points to support flagging growth, though it did warn that monetary policy alone can't revive growth. Moving on to the beleaguered Kingfisher Airlines, the 14-banker consortium led by State Bank of India is ready to move a debt recovery tribunal on selling assets of the grounded airline. Last week, the consortium filed a claim against Kingfisher under the SARFAESI Act. Lenders have already managed to recover 600 crore rupees by selling the pledged shares of the associate companies of the airline. The SARFAESI Act will help lenders to encash collateral to recover a part of their 7,000 crore rupees exposure to Kingfisher. But they are simultaneously moving to DRT as many securities do not fall under the SARFAESI Act. Car makers in India are enduring the worst sales streak in history after sales fell in April for the sixth straight month. Car sales fell 10.4% annually in April, according to SIAM data. This is the first of its kind consecutive fall for the industry since 1997, when the data was first compiled. Automakers sold 150,789 cars in India last month, according to SIAM data. It will take about 3 to 4 months for car makers to see any revival in sales as financing costs come down. Moving on to some of the financial results that were released during the week. Nasdaq-listed IT firm Cognizant Solutions reported a 17% increase in profits for the quarter ending in March. The strong revenue was in line with market expectations on account of robust spending from top clients in Europe. Its net profit stood at $284 million for the March quarter, up from $243 million in the year-ago period. Revenues rose 18% to $2 billion. The company maintains its full-year revenue guidance at 17%, ahead of NASSCOM's forecast of 12 to 14%. Another major result was of HDFC Limited, which posted a 17% increase in net profit for the quarter ending in March. Net profit rose to 1,555 crore rupees from 1,326 crore rupees a year ago. Individual loan growth boosted HDFC's numbers as it grew by 31% from a year ago. Income from operations rose 5,561 crore rupees. The company's consistent performance means that its valuations are among the highest in the financial sector. Moving to the pharma sector, Ranbaxy Laboratories, India's largest drug maker by sales, reported a 90% decline in its first quarter profits compared with the year-ago period. In the last fiscal, it had exclusive rights to the generic version of the cholesterol-lowering drug Lipitor for the lucrative US market. The company's net profits fell to 126 crore rupees, and sales fell by 34% to 2,440 crore rupees. Now for some news in brief. The major political news of the week was the victory of the Congress in the Karnataka state elections. The Congress returned to power after a gap of 7 years, winning 121 seats, while the BJP won only 40. In the 2008 elections, the BJP had won 110 seats, while the Congress had got 80. The BJP's performance in the state was marred by poor governance and corruption charges. Piramal Enterprises bought a 10% stake in Shriram Transport Finance for 1,652 crore rupees. Piramal plans to expand its presence in the financial services sector. The company is also planning to apply for a banking license. It will exit its investment next year in Vodafone Group's India unit, where it owns an 11% stake. The shares of the company were up 1% to close at 573 rupees. Moving to the real estate space, DLF is planning to sell up to 81 million shares and has chosen 8 banks for the institutional placement sale. The price range of the offer is yet to be determined. It has picked up Bank of America, Merrill Lynch, Deutsche Bank, JP Morgan and Standard Chartered, along with HSBC, Kotak Mahindra and UBS. And that's all we have for you. Thanks for watching.